Trader, of course, there are many different setups that you can use to trade and find opportunities. Our guest today is Mike Toma. He's going to talk to us about one that he uses. Mike, thanks for being here.
Thanks, Tim. Always a pleasure.
Well, I know that you've got about 10 that you focus on, but let's talk about one and talk about how it works. You call it the Secretariat. What is that?
It's actually, I call it Secretariat because if those who don't know, it's a Belmont Stakes, 1973, I think. This horse just came out of nowhere and just kept going down the stretch, about 31 lengths, and won with pride. I have 10 setups in my particular plan. This one just seems to always continue to perform in good markets, bad markets, and in different high volume, low volume. What it basically is and it's really simple if I can describe it, it's I'll take two moving averages, a 9-period EMA and a 30-period WMA. And basically what I'm really looking for is for those two to cross. So if the fast one crosses above the slow one, I know now I'm only thinking of longs. I'm only thinking about going long. So I'm reducing half my potential thinking, half my setups. When price will be racing higher for it to cross. When it pulls back right in between those two moving averages, that's my sweet spot. That's where I get my Reggie Jackson bat, and I want to hit this one out of the park. Now it doesn't always work that easy. But what I do want to do is always have a level of confluence in each of my trade setups. That's part of my plan, that's part of my rules as a trader. So what I'm looking to do is, in addition to that cross, and where price goes in between those two moving averages, I'm looking for other types of support. I'm looking for, say, another wider moving average, or even a MACD crossover. Or more importantly, I find recently the Fibonacci's. I'm not a Fibonacci fan, but they seem to be working well, particularly in that sweet 50, 62% Fibonacci range.
So if there's a Fibonacci level that falls in between those two as it comes back in and it hits that and is ready to go back up, that would be the perfect ideal trade then.
Yeah, I mean, there may be some interesting, maybe there's a news event coming on in 3 minutes. I'm not going to take it. I mean, my plan rules always guide me. I have to stick to my plan rules. But under normal circumstances, normal volume, that's it. I'm taking that.
And what time frame are you typically using this on?
Well, I track all my trades by certain time frames. And actually what I'm finding is a good question is from 10:15, right after that first 45-minute opening of the markets, to 10:15 Eastern till about noontime, that seems to where I'm getting the most success. I'm getting about 72% success rate on those. I'm looking at a 2-to-1 risk reward. And again, other times of the day, maybe it won't do as well. Overall, maybe mid-60s. But I know it seems to be in the past year, that 10:15 to noon time slot. Let the early morning mutual funds battle their way through. Once that settles down, I still have volume up to the lunch hour. I'm taking them.
And is this on a tick chart or a 5-minute or a 15-minute? What is it?
You can use different ones. I particularly like to use a 1224 tick chart, which can get you pretty good-sized moves, especially in that 10:15 slot. What you can also do is if you have using multiple contracts, which I really suggest you do for any types of trade setups, it gives you a lot more leverage as a risk professional. You could take them and have that one, maybe two, give it 2 points, and let the rest of the one ride. That's really what's the difference between being successful as a setup, but allowing you to be successful as a business.
Mike, thanks for your time.
Always a pleasure, Tim.